Yes. So, guys, in the previous class, we were talking about types of funds. So, part of the types of funds, we talked about open-ended and closed-ended funds, and also we spoke about unauthorized and authorized funds. And we continued the discussion till like investment vehicles. What kind of investment vehicles? What is the formation of a legal formation of funds? Like it can be investment company, unit trust. What is the difference between unit trust and investment company? And also, if company is issuing the stake, the ownership stake, we call it the shares. And if unit trust is issuing the stake, that's we call it the units. These are all the things we discussed, right? And also we discussed about the standalone funds, right?
Yes, sir.
Yeah,
Yes, Murli.
standalone funds. So again, I'll recap the standalone funds because our discussion will continue from the standalone funds, then umbrella funds.
Umbrella
So,
fund.
yeah. So standalone funds means we have a ABC fund and we have an investors. And ABC fund is going to invest in the shares and bonds and assets. Yes, sir. Every fund will follow the same structure, right? That is the purpose why we are investing in the ABC fund. So ABC will collect all the money from the investors and they will do an investment in the shares and bonds and everything. So what's the new in these types of funds? Why we are learning these types of funds? So as a standalone funds, we discussed, we understood that fund itself will go and invest into the securities. As a ABC fund, directly they will diversify the investments directly into the stock market. The direct investments will be done by the ABC fund. There will be a managers and investment managers. As a professionally, they will manage their fund on their own. Again, they do not invest in any other funds. Directly, they will invest into the securities, like in the stock market, bond market, and different kinds of assets. They will go and invest. That is called stand-alone fund. As a fund itself, it will stand as an alone and it will act as an independently. It won't depend. It won't rely on any other funds. That is called stand-alone funds. And we are discussing about umbrella funds. So what is umbrella funds? The umbrella fund structure will be like this. We have a main fund, same. ABC fund is there. Again, investors will provide an investments to the ABC fund. Let's say we have received 100 crores from all these investors. Now, this ABC fund will invest some amount in sub fund 1, sub fund 2, sub fund 3. What are all these sub funds are again? Sub funds are nothing but subsidiary funds to the ABC fund. They are not actually directly investing into the market. Again, we have a sub funds. Sub fund 1, sub fund 2, sub fund 3. What is sub fund 1, sub fund 2, sub fund 3? Suppose there is a fund 1, sub fund 1. The major investments from the sub fund 1 is going to be in equity own in equity. They will invest only in equity. And we have sub fund 2. This will invest on bonds only. And we have sub fund 3. This will invest into the real estate. Each fund have a specific diversification. Each fund have a different and specific unique investment strategies. So what exactly they're simplifying? Instead of identifying on their own, ABC fund wants to identify all this, how much I have to invest in bonds, bond and equity, real estate, how to track the performance. It's a bit difficult for them, right? So what they're simply choosing, already there is a fund, sub fund 1 in the market. So they're focusing on equities only, right? So they're performing well. So let's go and invest 30 crores in that fund. And there is another fund. So the another fund is focusing on only bonds and fixed income securities. Let's go and invest on that fund itself. Fund again going and investing into the another fund, small fund. ABC fund is big fund managing 100 crores capital, 100 crores fund. So this 100 crores fund again will be invested in a different funds. Small amount will be invested in a each fund. So they don't need to monitor each and everything, right? Simply they can monitor only these three funds. They can manage the entire 100 crores. So they're more simplifying their investment strategies. Are you getting the point? Instead of investing into these funds, even this ABC fund can act like this also standalone funds. Directly they can go and invest into the bonds, shares, and assets. But that's a bit tricky because they have to identify the opportunities and they have to invest. So instead of identifying opportunities directly, they are choosing the funds which are specialized in each sector. ABC fund, sub fund 1 is specialized in equity. They're showing more returns. So let's go and invest there. Why we have to take extra effort again on that? We identified one fund, that fund is performing well. We will go and invest in that fund itself. That is called sub fund, subordinated fund. Everyone getting the point? Everyone understand? Everyone.
Yes, Mahesh. Yes, Mahesh.
Yes, sir. Yes, sir.
Suppose sub fund is getting lost, sub fund 2 is getting a profit. We can diversify we have diversified all this portfolio so that we can set up the loss from one fund to another fund. Basically, we are keeping our investment in different kinds of funds. Maybe equity is a bit risky, so that's why we're keeping only 30 crores. Fixed income securities always secure. So we're keeping 40 there. Real estate, obviously there will be a boom for the real estate. So we're giving 30 crores. So we are diversifying and we are just monitoring the performance of each. So that is possibility. I mean, that can be possible through this sub funds. Everyone getting the point?
Yes, Mahesh. Yes, sir.
Yes, Mahesh.
Yeah.
Yes, sir.
The next one, funds of funds. Very, very important one. Funds of funds. So what is this funds of funds? Same, it is also similar to the umbrella funds. In umbrella funds, there is a main fund which is having 100 crores. Again, they went and they have invested in different sub funds, which are small funds, right? Funds of funds also same thing. There will be main fund. Let's say ABC fund here also. Again, this fund will invest in different funds. Like again, there is a fund X, they'll go and invest there. There is a fund Y, they will go and invest there. There is a fund Z. Like that, they will identify different funds. They will go and invest into their funds. This is called funds of funds. These are not directly investing into the stocks. Even this umbrella fund also same thing. Sometimes some funds may be managed by the same fund houses also. In umbrella funds, there will be management of the sub funds also by the same investment managers and same fund houses. But in case of this funds of funds, this fund X and fund Y may be managed with some other fund houses also. It's not required to be maintained by same fund house. Suppose ABC fund launched by HDFC Securities. HDFC Securities. So this sub fund 1, sub fund 2, sub fund 3 also will be managed by the HDFC Securities only. But what actually they are doing? They are dividing for the specific purpose. Sub fund is only for the purpose of equity. Sub fund 2 is only for the bonds. Sub fund 3 is only for the real estate. Like that, HDFC Security itself created 3 sub funds. Again, this main fund is going and investing into the sub funds. This can be possible in case of umbrella funds. But in case of funds, main fund, HDFC Securities are maintaining this ABC fund. Sorry, yes. Main fund, ABC fund. But again, fund X, fund Y, fund Z is there, right? These funds can be maybe managed by some other securities also, some other security, fund houses also. Let's say fund X may be maintained by the ICICI Securities. And this can be by the Axis funds, Axis Blue Chip funds or something. Like that, there will be different fund houses for each fund. Instead of identifying opportunities and doing direct investments, they are going and choosing the funds which are providing more returns. Simply, they're going choosing that. They can change, they can reduce the burden of investment, right? This is called fund of funds, funds of funds. Everyone understanding?
Yes, sir.
Everyone?
Yes, sir.
Okay. The next one, master fund for feeder funds. Very, very important. Master fund versus feeder fund. So this is very important. In hedge funds and mutual funds, we can see this concept called master fund, feeder fund, main fund, and also like feeder fund. These are all the terms we use a lot. First, we'll talk about what is master fund and what is feeder fund. Suppose let's assume if we are launching a fund, ABC fund is launching a fund. Obviously, having an international investors is quite common, right, for the mutual funds, because even foreign institutional investors can also come and invest, right? As pension funds, insurance companies, banks from different parts of the world also can come and invest into these funds. There is a possibility, right or not?
Yes, sir.
Having an international investors in the fund houses and the investments into the fund is quite common. But the problem is, suppose if I'm launching a fund in India, we are launching a fund in India, a lot of complexities will be there. If any investor wants to invest into the Indian funds, a lot of complexities will be there, a lot of taxation also will be there. Regulatory compliance is very more in case of India. So what will happen? Obviously, investors from the different parts of the world will get an hesitation. Why? Suppose if you want to go and invest in India, I have to comply with more things, and I may have to pay extra tax, more tax in India. 30% is slab rate. Once your income is more than 10 lakhs taxable income, then we have to pay 30% tax. And also capital gains will be there. A lot of taxes will be there in India. So that's the reason they may want to avoid these taxes. Because if you want to attract the international investors also, we need to what do you say? We need to give the way to them, like in order to reduce the tax burden. Simply, we can say Legally, we should provide a plan that how we can avoid the taxes for the international investors. Then only we can attract international investors, and we also get a funds, right? So for that reason, they came up with this plan called feeder fund and master fund. So we have two types of funds here: master fund and feeder fund. So what these firms will do, master fund and feeder fund will be established by same fund houses, same fund. But why we have this master fund? Majority of the investment decisions, like we spoke about investment manager, right? IM, who will take all the investment decisions. We call him as the investment manager. So all the investment decisions will be taken by the investment manager only. And also the investments will be done from the master fund only. All the investments will be done from the master fund only. Where to invest, how to invest, when we have to sell. All these decisions will be taken by the master fund. And also the investments, reporting, everything will be done by the master fund only. This master fund will be established in the specific jurisdiction. Suppose if I'm starting a fund for the benefit of US citizens, for the benefit of USA citizens, I'll launch this master fund in the USA only. Suppose if I'm launching this fund, majority of the investors coming from India, majority of the investors are from India, then I launch this fund in the India only. So wherever I expect majority of the investors into the fund, there itself I'll establish this master fund. Understanding, everyone? Master fund is the main fund, guys. Investment decisions, investment reporting. Reporting is nothing but we have to prepare financials and we have to showcase all the investments, right? That is called reporting work. So reporting,
Yes.
investment decision, everything will be done from the master fund only. Most of the investments also will be maintained by the master fund only. So this master fund will be established in the place where we have majority of the investors. Suppose I have a majority of the investors from the UK. I'm targeting the UK investors for the tax saving schemes which are available in the UK. I'm focusing on the UK clients. So I'll establish this master fund in the UK itself. That is called main fund. Obviously, wherever I establish the fund, it can be the USA, UK, India, whatever it is. International investors is quite common. Again, I'm highlighting this point. Having an international investors into this fund accounting and fund house is quite common. Definitely, we'll have an investments from the different parts of the world also. We have to accommodate. Suppose if I ask international investors to come and invest in India, definitely they may have to comply with a lot of formalities because they have to register as FIIs in the SEBI and they have to invest. Again, at the time of realization, they will be getting a lot of profits from India, right? They have to pay taxes to the India government also, right? They're earning from India only, right? Obviously, they have to pay tax to the India government. A lot of complexities. So no one will prefer to come to India to invest. So how to attract investors? So what I'll do, wherever there is a less tax rules, in entire world, we have few countries, we call them as the tax haven countries. Tax haven countries. You know about Luxembourg? Anyone heard about it? Luxembourg.
Yes.
And we have
Yes, Mahesh.
Ireland. And we have tax haven countries. Same islands and ఉంటుంది. Even US లో ఉన్నాయన్నమాట. So here, not entire USA, but few parts of USA, like few states. In India also we have states, right? Similarly, in USA, Canada also, there is a few provinces where there was a very less tax rules and regulations in order to attract the investors and improve the um, what do you say, industry of finance or something. They have given some tax relaxation. Anyone can come and invest, anyone can do the trading and everything. Tax regulators will be very less. There won't be much complexities if you want to go and start the business there. There won't be much complexities. So what they will do, in India itself, I'm establishing this fund because I'm targeting most of the clients and investors from India itself. So main fund will be in the India only. Again, I'm launching a different fund in the Luxembourg because tax rules, and if any investors wants to come to invest into the Luxembourg fund, very easy to invest because there won't be much regulations, rules and regulations. Tax also will be very less. So what I'll do, I'll establish my fund in Luxembourg as a feeder fund. So all international investors, like people will be there from UK and USA and from different parts like Australia, and we have Canada. Canada. All international investors will come and invest into this feeder fund. All these investors will come and invest into the feeder fund. Feeder fund is nothing but money will be collected from the different investors. I have clients and investors from the different parts of the world. So what I'm doing, I'll collect all these international investors' money. Fund will be collected to the feeder fund. The feeder fund will transfer money to the main fund,
Master fund.
master fund. That is the purpose of having feeder fund, guys. That's it. Feeder. Feeding means we are feeding. What is the feeding? We are collecting and giving back to the main fund. So basically, it's feeding the fund to the main fund. But feeding purpose only, we have established a fund, feeder fund. That is called feeder fund. Understood?
Yes, sir. Okay.
Everyone?
Yes, sir.
Yes, sir.
And also profits will be there. Like once master fund generate the profits, master fund will distribute the profits to the feeder fund. Again, feeder fund will distribute all the profits to the different international investors. Both are same. Both are established by the same only. But investment decisions, everything will be taken by the master fund. Only for the feeding purpose, feeder fund will be maintained in some other country. That is called feeder fund. Everyone understood?
Yes, sir. Yes, sir.
Difference between master fund and a mutual fund.
Come again.
Difference between mutual fund and master fund.
Mutual fund may also can have this master fund. We are talking about types of funds. Mutual fund may also be a funds of funds, umbrella funds, standalone funds, or master fund or feeder fund. Master fund and feeder fund is a structure, type of fund. Funds of fund is one structure. What is the structure? One main fund will be there. It will invest in different funds. This funds of funds. Mutual fund can also be fund of fund. Similarly, mutual fund may have a master fund and feeder fund in different parts of the world. That is also structure. This is a type of fund, guys. Understanding everyone?
Okay, sir.
Yes.
If it is not clarified, please let me know, guys. We are just discussing about the types of funds. We are not talking about the differentiation between mutual funds, hedge funds, and private equity. See, we have totally three types of funds, guys. Let me write it here. I don't want to give this information because it will confuse you. But let me type here: mutual fund, private equity, and hedge funds. These are the major types of alternative investments we have. These are only, and we have ETFs as well, exchange traded fund. Okay, let's assume we have four type of funds. All these are four type of funds can be any part of like this. I mean, any it can be a standalone fund, it can be funds of fund, it can be the master fund, feeder fund, it can be umbrella fund. Any form they can choose and they can start their fund activity. Mutual fund can also be master and feeder. Private equity also can be master and feeder. Hedge fund can also be master and feeder. Everyone getting the point?
Yes, sir.
These are all the structures and types of funds, how they are going to operate. These are all the structures they have operate. Everyone understanding or not?
Understand.
Yeah. Then we have ETFs, exchange traded fund. I'll talk about it later, guys, because it's a huge big topic as like a mutual fund, private equity, and hedge funds. ETF is also one of the alternative investments. So we'll have to discuss that separately. ETF is nothing but just like a stock. You can directly go and invest in the ETFs in the stock market itself. Exchange traded. The name itself is saying exchange traded. So they will be trading in the stock exchange. You can go and invest into the mutual. Into these ETFs. These are also funds only. These are also funds. Okay. And
Okay,
what
sir.
else we have? What else we have? And we spoke about prospectus as well, right? The documents, prospectus, we spoke about it, right?
Yes, ma'am.
Just give me a minute. Okay. So these are the basic structures and types of funds we have. Give me a minute. I'm getting a call. I'm sorry, guys. So that's the types of funds we discussed. And mutual funds, private equity, hedge funds, and ETFs. Okay, let me talk about these types of funds also, just as a brief. Do not go into the more in-depth concepts. But for our namesake, as topic arises, let's discuss about these funds also. Mutual funds, private equity, hedge funds, and ETFs also. First, I'll talk about mutual funds. We know all about mutual funds, right? Can anyone tell me what exactly the meaning of mutual funds? What these guys will do? Anyone have any idea?
Yes.
Hmm?
Can you hear me?
I can hear you. Tell me.
Yeah, mutual fund is a fund that collect money from the investors and they'll be investing into the securities market and financial market, and they generate a profit and that will be equally distributed to the investors who are invested in that.
Okay. So the entire activities, the entire mutual fund, either you talk about mutual funds, private equity, hedge funds, or ETF. ETF is a bit different. Let's keep it aside. First, we'll talk about these three funds. Okay. Either you talk about mutual funds, private equity, hedge funds, ETFs, all are alternative investments only. Okay. What is the major objective of these mutual funds, private equity, hedge funds? Simply, they will collect money from the different investors. As we discussed in the previous class, they will collect money from the different investors and they will invest on behalf of the investors. Yesterday onwards, we were discussing this topic, right? Simply, they will collect money from the different investors like this, and they will invest into the different asset classes. Once money got, revenues and profits got, they will distribute it to the investors. The same purpose. As we talk about mutual funds, private equity, hedge funds, the same concept. All these three will do the same thing, but features wise will be a bit different. Mutual fund will target few types of clients, and mutual fund will focus on few types of investments, and the entry and exit policy will be different, and charging of fees will be different, and risk and return will be different in these three categories of funds. But major objective and the major business is same thing: collecting, investing, and distributing profits and return to the investors. For doing all these activities, they will charge certain fees as well. That's it. That's the only fund houses and mutual funds, private vehicles will do. Now we will see one by one difference between one by one. Mutual funds, private equity, hedge funds. First, we'll talk about mutual funds. See, mutual fund is only for the majorly it's meant for the retail investors. Majority of the investors coming from the retail investors. Retail investor means who? Who are the retail investors?
Normal people.
Normal people. Even the minimum amount of investment also will be very less in case of mutual funds. We don't need to go and invest with a minimum of 1 lakh, 10 lakhs. There won't be such kind of requirements. Even if you have 1,000 rupees or 500 rupees, you can go and invest. That is the flexibility we have in a mutual funds. Because not only in India, in majority of these states and countries, the mutual funds will be operated for the retail investors. Because they will be having a lot of investors. You know how many number of investors will be there in the mutual funds? Some thousands and lakhs of people also will be there. If they need like 100 crores, it won't be sufficient for them, right? If they want to collect the entire money from the 100 people or 1,000 members, each member may contribute 1,000 rupees, 10,000 rupees, 500 rupees, 5,000 rupees. The amount of contribution will be very less. That's the reason they'll accept this kind of investment from a lot of people in lakhs. In lakhs only, the investors will be there, and minimum amount of investment is very less. Even with 500 rupees, 1,000 rupees, also minimum amount of investment will start. That is the features of mutual fund. And one more thing is, majorly, if you want to start this mutual funds in India itself, let's take for an example, India. If you want to start mutual funds in India, a lot of complexities will be there. We have to take a lot of approvals. We cannot do our investments in the way whatever we want. Even on the investment objectives, the prospectus. Yesterday we spoke about prospectus, right? The advertising document. So even the advertising documents also, again, we need to get an approval from the SEBI, Security Exchange Board of India. They need to approve the investment objectives, how much fees you are charging for what kind of asset classes you are targeting and investments. Are you going to invest in bonds? Are you going to invest in equities? Are you going to invest in real estates? Everything we need to disclose with the public as well as the SEBI. We have to take an approval. A lot of approvals need to be taken. Then only we have to start this mutual funds. A lot of complexities and compliances will be there in the mutual funds. Understanding?
Yes, Mahesh.
More regulatory non-regulatory compliances will be there in mutual funds only. Why we have a lot of complexities and regulatories in mutual funds only? Can anyone guess? When we compare with the remaining private equity funds and hedge funds, private equity funds, there won't be that monetization regulatory very less. Compliances are very less when you compare with the mutual funds in case of a private equity and hedge funds. But in case of mutual funds only, compliances are a bit high. Can anyone guess the reason? What kind of investors they are targeting actually?
Normal people.
Normal people.
Retail
Retail
investors.
investors means most of the people from the below middle class and middle class, salaried people, these kind of investors will come. Obviously, that's it. It's
Yes.
nothing but public money. Public. Whenever there is involvement of public is very high, definitely it's a responsibility of government to take care of some compliances, regulatory monitoring issues and all. So obviously the supervision and monitoring will be more in case of mutual funds. Suppose if there is no such kind of monitoring, if there is no such kind of regulatory and compliances, what they will do? They will go and play with that money. So obviously people will mess up with an losses. So in order to protect the investors' interest, especially the SEBI and the government will have a lot of compliances in case of mutual fund sector. You know what kind of assets and what kind of assets, especially this mutual fund will go and invest? Any idea where they will go and invest? We have like a different categories and different asset classes, right? We spoke about equity, debt market, equity, and bond market. Do you guys know about derivative concepts? Derivatives, anyone by chance?
This might I know.
Derivatives is risky or less risky?
Derivatives are risky instruments. They are used for the hedging of risk to mitigate the risk of investment.
Derivatives are very risky, actually. Okay, derivatives are very risky. So mutual funds are not allowed to do trading in derivatives. Only they have to invest in fixed, I mean fixed income securities, equities, in some cases in the real estate also. Majorly they will focus on equities and fixed income securities only. Equities are also risky, but that can be managed. But derivatives are not like that. In one day itself, we can sell the house. That kind of huge profits also will be there. I mean, chances for the profits also in the same way, and losses also will be in the same way. Okay. Then we have a private. Then we have private equity. So private equity and hedge funds both are meant for the high net worth investors. High net worth investors means a lot of rich people will come and invest. People have high net worth, they can come and invest. Even the minimum amount of investment also will be very high in case of so the minimum amount of investments also will be very high. In case of mutual funds, if anyone wants to come and invest, even with 5,000 rupees also they can come and invest. But it's not the same case with the private equity. If you want to go and invest in private equity, minimum amount of investment will be like 10 lakhs, 20 lakhs, or even in some cases 50 lakhs, 1 crore also will be there. So it's not available for retail investors. Yes or right? Yes or no?
Yes, Mahesh.
Yes, sir.
Is everyone understanding? Private
Yes.
equity and hedge funds are for the high net worth investors, not for the retail investors. Why? The minimum amount of investment is very high. So obviously, as a retail investors, normal middle class people, it's not possible for them to go and invest with lakhs of investments, right? So they won't go and invest. Who will come then? A lot of rich people will come.
High people.
A lot of people will come and invest. If they're coming with a lot of, high net worth investors, obviously the private equity and hedge funds will also have a liberty to take high risk of investments, isn't it or not? If retail investors, yes, I have to take care my money very carefully. The investment strategies, everything need to be designed very properly with a minimal risk. Even return can also very less. Mutual fund will have always very less risk. Maybe it will be more than fixed deposit rate of return. But when we compare with the private equity and hedge funds, mutual funds returns are very less. Risk is also very less. Returns are also very less. If you want to get huge returns, we have to go for a huge risk. Simple. That's a normal strategy, right? If you want to have a more risk, take more risk, more risk. If you want to have a more returns, definitely you have to go for more risk. There is no possibility with a minimal risk, high returns. There is no such thing. It's an investment strategy. If you're doing any kind of business, if you want to maintain a minimum risk, definitely you can expect only minimum returns, not with a huge returns. That's the reason mutual funds will always give you only less returns with a less risk. There won't be much risk and there won't be much returns. But in case of private equity hedge funds, they have a liberty. What kind of liberty? There won't be much compliances. They don't need to comply with a lot of rules and regulations because there is no money from the retail investors. They're collecting money from the lot of high net worth investors. Obviously, they won't care about losses, isn't it? They are collecting money from the high net worth investors. Obviously, as a high net worth investors, we will expect a lot of returns. If investors are expecting a lot of returns, even they will also go for the next level of risk. What is next level of risk? They will invest in derivatives. They will invest in some projects. They will invest in venture capitalists. These kind of investment strategies they'll go and choose. So risk is also high, return is also very high. But compliances and regulatories and all will be less in case of private equity hedge funds. Understood, everyone?
Yes, sir.
Yes.
Everyone understanding clearly?
Yes, Mahesh.
Yes.
We'll talk more about it. What is again more about private equity and hedge funds. Okay, sir. Mutual funds, we understood. Basically, they will focus on the retail investors. Returns is less, risk is less, and they will invest into the equities and fixed income securities. What about private equity? Let's talk about private equity for a few minutes. Why we are calling it as a private equity hedge funds with different names? Whether both are, both funds are focusing on similar kind of investors. Similar kind of risk is there, having in both kind of funds. Why we are calling it as different funds? Again, there is a slight differentiation between private equity and hedge funds. So private equity means majorly they'll focus on the private companies. Their investments in the private companies. They don't even do a lot of investment into the derivatives. They will invest into the startup companies, venture capitalists. Do you guys know about VCs, venture capitalists? Hello? Do you guys know about VC, venture capitalist? No one. Okay, did you guys watch this movie, Akasham Ni Saradhiga, Surya's movie?
Yes, Mahesh.
Did anyone watch that movie? Akasham Ni Saradhiga something. Surya's movie. No one watched. Yes or no, guys?
Yes,
I don't
Mahesh.
ask you any questions.
No.
No one. You have to watch this movie. It's a really nice movie. Watch it. So,
Yes.
in that movie, the hero will be having an idea. What is that idea? Low cost flight traveling.
Yes.
Normally, of 5 people, what will do? They will invest a lot of things in flight, like food material will be there, a lot of expenses. In order to provide luxury services, obviously they will, in order to meet their standards, they will be having a lot of expenses. For that reason, they're also charging a lot of charges from the customers as the flight rate fares. So what hero idea is, we don't want to provide all these kind of luxury things for even 1 hour traveling, 2 hours traveling. Also, why we need to provide a food there? So let's reduce the food cost. If you want to maintain the food capacity in the flights, you may have to have a lot of fuel cost. So to reduce the fuel cost, we'll cut down the this one. What is this? Food providing food for 1 hour, 2 hours journey. Air hostess, we can cut down the air hostess. We don't require 10 air hostess to accommodate 100 passengers. Like that, everything he will try to keep it as very economic, so that he can reduce the flight charges as well. But his idea is good. What is that? There is a word, low cost flying with low expenses or something. We can maintain the flights with the low expenses so that we can charge low fees, low charges from the customers also, from the passengers also. That's the idea from the Surya side. But the main thing is he's having only idea. You don't have money to start the business. You know how difficult it is to start the flying business? We have to take a lot of approvals. We have to purchase the flights. We have to take a rent. At least we have to take a flights and a rent, and we have to run the business. A lot of money will be there, right? So you don't have that much of money. Only is having an idea. You want to implement. So what he will do? He will be looking for the venture capitalists, VC. What VCs will do? Venture capitalists will come and invest in an idea. Venture capitalists will simply come and invest in an idea. Suppose we have a formula. What is the formula? With this business strategy, we can achieve this much profits. I have a business idea, but I don't have a money to invest. In that case, venture capitalists will come and invest into your business. Let's do the business. You have an idea, I have a cash. So I'll give you the cash. Let's do the business. Once you get a profits, you have to give me 80% profits to me because I'm investing everything. For next 10 years, I need 80% of profit. After 10 years, I'll leave it with you. I'll leave the entire business to you. But up to 10 years, I'll expect 80% profit. Like that, venture capitalists will come and do the investment. Obviously, when they're doing investment, they will expect a lot of profits as well. Everyone understand the point?
Yes, Mahesh.
I have a formula, like let's say like a COVID vaccine or something. I have a formula, but I don't know how to take it to the market level, research level. I don't have all these things to. I mean, spending money on the research and taking it to the market, taking an approval from the government. I don't have much idea. So what I'll do, I'll approach from VC, venture capitalists. I'll explain all my formula and everything will be given to them. So they will invest a lot of money on my research and everything. They will take it to the public. If we get a profit, we will distribute among the ratios that we have decided. Okay, sir, you're saying everything is good. What if it gets fails? What if we have a huge losses? Nothing to do. You have to bear it. That's it. That's the purpose of having a private equity investors. They have collected money from the high net worth investors. They're ready to take a lot of risk. That's why they're taking a lot of risk. Investors are ready to they're expecting a lot of returns. They're ready to take a huge risk as well. So they're directly going and investing in idea itself. That is the investment strategy. If everything is going good, definitely we can experience a lot of profits, right? Understanding the point? This is just one of the strategy private equity people will follow. Similarly, as a private equity, what they will do means they don't even go to the public companies. Suppose there is Reliance company which is performing well. DMart is there, Adani Industries performing well in the stock market. They don't go and invest into the stock market. They don't do an investment into the this IPO and all. They don't do investments. Simply they will identify one company, private company, which is performing very well. They will just identify the company which is performing very well. Very startup company, small company. They will identify that company. They will go invest into that company itself. Once they have invested a lot of money, what they will do? The company will go to the next level because lack of money. Maybe there will be difficulty for few companies, right, to expand the business, to expand the market. There may be operating in a small sector, small, what do you say, very smaller category they're serving because of lack of some market extensions, lack of money. But this private equity people will go and purchase the company like 50%, 60%, they will purchase. They will invest a lot of money on different marketing strategies, investment strategies. They will take it to the next level. The entire marketing capacity will increase. Suppose we have a company called 10 crores worth capital. 10 crores worth business power. There is a company 10 crores worth. 10 crores. So what this private equity people will come? They will come and purchase this company for, not purchase, they will come and invest 7 crores here. 7 crores capital will be invested into the fund company. The entire value of company is 10 crores only. And the 10 crores capital, this private equity people coming and investing 7 crores. Now tell me, who will take the entire decisions of this company? If they want to do anything with their company, who will take the decision?
7 crore invested person.
The people who invested 7 crores, obviously they will take care of the investment strategies. They will take the management control. They will operate the company, entire company. Because they're investing more than 50%, right? So what will
Yes.
happen with the founders? Why they have to give? Because as a founder, they have an idea, they are running it successfully, but they don't have a cash to take it to the next level. That's the reason they're approaching private equity investors. They are coming and investing more than 50%. Now the private equity fund will take the entire control of the company. So they will improve the business with a lot of strategies, investment, everything. They will take it to the 100 crores business. See this, 10 crores become 100 crores. As a founder, as a owner, I had only 3 crores. Now it become 30 crores. It's a profit only, right, for me. Isn't it?
Yes, Mahesh.
Now they will sell this company. This 7 crore people invested, this 7 crore become 70 crores. As a owner invested 3 crores, it became 30 crores. As a private equity investor, private equity fund, after 10 years or 20 years, they have to exit and they have to return back the capital to the investors, right, who invested into the private equity fund. If they want to return back to the fund, they need cash. How they will get a cash? Already they invested in this company. They have invested 7 crores, now it became 100 crores. How to realize this 100 crores? How they will realize this 100 crores? Can they close the company and can they sell it to someone else simply? Can anyone guess what is the next level of achieving more cash and more selling? Any idea?
IPO.
Yes, next level is IPO only. Excellent. IPO only. 10 crores business become 1 crore, 100 crores. Sorry, 100 crores it became to 100 crores. Now they will go for the IPO. They'll plan for the IPO. So in the IPO, definitely easily they can get at least 150 crores again. Because successful business, right? So they will get easily 150 crores. So they will get their 100 crores, they will leave the company. That's it. That's the strategy. This kind of investment strategies will be done by the private equities. Now you understood why we are calling it as a private equity. They're targeting, they're focusing on only private companies. They're not focusing on public companies. Public companies who are listed in the stock market, who are trading their stock in the stock market. But they're not focusing on public companies. They're focusing on private companies, small companies, but having a high growth rate. Small private companies only, but having very high growth rate. Again, we'll talk a lot of strategies and we will discuss how exactly it will work and everything. But as long as you understand the meaning of private equity, they will focus on the private investments, private companies. Understood, everyone?
Yes, sir.
Yeah.
Yes,
And
sir.
hedge fund. Hedge fund is again next level of risk, guys. They will do whatever they want. As a private equity, also they don't go into the different categories of business. Major focus is only on private companies. They will focus on venture capitalists, private companies. These kind of investments only will do. But in hedge funds, they will do anything. Suppose one producer is there. If they want, if he want to produce a film, he will go and invest into the movie also. Even movie also they will go and invest. There is a derivatives, he will go and invest. Every product they will go and invest. Wherever there is a high chances of returns, they will go and invest. Definitely, whenever there is a chances of high rate of returns, there will be risk as well in the same way. Isn't it or not?
Yes.
As a movie, we know, right? If it is successful, definitely we'll get a lot of profits. What if it get failed?
Loss. We'll go loss, sir.
Producers, producers will be end up with a lot of losses, right?
Yes, Mahesh.
So that's the reason
Yes, sir.
hedge funds can do anything. They can take a lot of risk. Obviously, they will get a lot of returns as well. But again, what is the risk? I mean, private equity is also taking a similar kind of risk, right? Then what is the difference between hedge funds? We'll talk about those kind of differentiations. So in mutual funds, is it for the short term or long term mutual funds?
Long term.
Time, sir. Long term, sir.
As an investment strategy, everyone will focus for the long term. Even if I invest in mutual funds, private equity, hedge funds, whatever it is, as an investor, my objective should be for the long term nature, more than 5 years, more than 10 years, at least more than 10 years, or we'll go and we'll invest into these kind of funds. But as a mutual fund, I said already, most of the mutual funds will be in open ended. What is the open ended?
You can subscribe or redeem at any time.
Anytime you can exit the fund, anytime you can enter, anytime you can exit the fund. That kind of feature will be there in mutual funds. But because they're open ended,
Yes, sir.
in case of private equity, it's a closed ended fund. Suppose once you enter into the fund, there will be lock-in period. Lock-in period. Lock-in means the private equity will be established. There will be started for 1 second, guys. I'll keep it on mute. Give me a minute. Sorry, guys. So you're talking about hedge funds, yeah. The period, period. In mutual funds, it's always open-ended. Anyone can come and exit anytime. Redemption subscriptions can be possible throughout the lifetime of a fund. But in case of private equity, there will be a lock-in period. Suppose if they have locked for 10 years, once you exit, you cannot exit until you complete 10 years. If you want to sell your stake, you can sell it to someone else. Again, there is a different procedure. But as of now, you guys need to understand that it's a fixed period will be there for long-term nature, for 10 years, 15 years. So until that, you cannot exit from the fund. Again, private equity also won't allow new investors into the fund. Once they have closed the fund, they won't be allowing of any new investors into the fund. Private equity. And comes to the hedge funds. Hedge funds now tell me is it open-ended or closed-ended? Can anyone guess?
Closed-ended.
Hedge funds is also open-ended only. Why it's open-ended, sir?
Okay.
They are investing a lot of risky assets, right? How it's going to be open-ended? See, the investment category, if you observe the investment category, mutual funds are going and investing into the equities and bonds. As an equity bond, anytime we can realize in the market, right? So that's not going to be a big issue. So the liquidity is very high in case of mutual funds, isn't it? What is liquidity? We should be able to sell the securities. As a mutual funds, they're focusing on what? Equities and bonds. Equities and bonds, we can sell it in one day also. That's not a big deal, right? Equities, normal shares in the market, we can sell it or not?
Yes, Mahesh, you can
We
sell
can
it
sell it.
anytime.
So that's the liquidity is very high in case of mutual funds. The private equity, we invested 10 crores. You took a lot of decisions, investment decisions, and everything. To take this 10 crores business to 100 crores, will it happen in one day, 1 month, 1 year?
No.
No, definitely it takes a lot of time. At least 10 years, 5 years. It will take a lot of time, long term. That's the reason they will keep it as a long term and closed-ended. Again comes to the hedge funds. Hedge funds, they're investing in a risky projects. But again, those are also short term, not long term. They can also realize their investments quickly. They will focus on these kind of things, normally like quickly completing projects, having high risk, majorly into the options, equities, stocks. They'll focus on each and every type of security. So options are also related to the stock market only and equities only. But the strategy wise, they're choosing the options, futures, forwards, and all these things, which are very risky in the stock market. So those things also can be realizable easily, can be liquidated easily. That's the reason liquidity will be very high in case of hedge funds. That's the reason these are also open-ended only. Understood, everyone?
Yes, sir. Yes, sir.
So now we understood what kind of investors invest into the hedge fund.
Can you repeat hedge fund?
Sorry, come again.
Can you repeat hedge funding, please?
Hedge fund.
Yeah, can you repeat it once again?
What I was talking about hedge funds.
No, I couldn't understand, so that's why I just recall it.
Okay, hedge fund will invest in a lot of risky assets. They will go and invest in the derivatives. And if anyone is producing the movie, they can also invest in the movie. If there is another risky project, they'll also go and invest there. So they do not have any boundaries and the limits and investments. And any kind of investments, and any kind of securities and assets, they'll go and invest. Basically, they just want to achieve a higher rate of returns. Even the market is very in downturn. All markets are facing losses. Still, even at those kind of situations also, they'll try to get a profits with their strategies, investment strategies. Obviously, when they're taking such kind of strategies to achieve more profits, the risk also will be in the same way. Right or wrong?
Yeah,
If everyone is getting
Yes.
if everyone is
like
getting a
less private
losses,
equity.
if everyone getting a losses, even at that time, such difficult times also, you're trying to get a profits. So obviously, you're taking extra risk than them. So when you're taking extra risk, if it gets successful, definitely you'll be having a lot of profits. Otherwise, you'll be ruined. There is a chances for both profits as well as losses. But again, that can be realizable easily. We can liquidate our assets and we can sell our assets in less than 1 month or 15 days, even 1 day also in some cases. So we can realize our investments. So the liquidity is very high in case of hedge funds and mutual funds. But private equity is not like it because of the characteristics of our investments. Majorly, they are investing into the venture capitalists and private companies. So the realization of private companies and the value improvement of companies is not going to be possible within a day, month, or year. It will take a lot of years. That's the reason it's a closed-ended fund and long-term mutual. These are also long-term only, but these are having high liquidity chances. Everyone understanding the point?
Yes.
Ramesh,
Yes,
all
Manish.
clarified?
Yes, I do.
Okay. Then what else we have to take? About risk as well. Mutual funds having less risk and low returns. Private equity funds, when we compare with the mutual funds, high risk, high returns. And about hedge funds, when we compare with these two funds, definitely hedge funds are having high returns, risk also will be there. What about compliances, regulatory compliances, legal issues? In case of mutual funds, it's very high. Private equity, moderate. In hedge funds, very low.
Okay,
Okay.
sir.
Even
Okay,
our current UK Prime Minister, he also worked in hedge funds only. Before he became a Prime Minister, he worked in fund houses. He also, what is it? Let me show you that one. Even he had a hedge funds, I think. Rishi Sunak, right? He worked as an analyst in Goldman Sachs. Even we have our students in Goldman Sachs. See here, the 42-year-old bank economic prime minister spent the bulk of his private sector days working for hedge funds. He worked as a hedge fund manager as well, fund manager, including one of the finance industry most prominent. I cannot read the entire article here, but he worked in hedge funds. Okay, so that is called hedge funds, and we have ETFs, exchange.
నేను మీటింగ్ జాయిన్ అయినా
Sabana. And we have a ETFs, exchange traded fund. So it's very plain funds, just like we have stocks. These are also funds, but traded in the stock exchange. We have mutual funds, right? Same thing. Again, the characteristics will be same in case of mutual funds only. For the ETF funds also, every time it will be traded in the stock exchange. But mutual funds won't be traded in the stock exchange. But ETFs, just like a normal stocks, bonds, it will be traded in the stock exchange. We can go and purchase the ETFs. Again, based on the sectorial wise, we have different ETFs as well, like ETFs which are focusing on Bank Nifty and focusing on some what is the FMCG securities. A lot of classification will be there in ETFs. By choosing their sectoral indices, we can go and purchase the ETFs directly. Suppose you are not that much knowledgeable to invest in stock market, at least you can try with the ETFs. Less risk, low returns. ETFs also, because they're also trading on stock exchange only, just like a mutual funds. But mutual funds are not trading in stock exchange, but ETFs will do. But remaining features are same: open-ended, less risk, less returns. All these things are same only. Okay. Again, we will discuss a lot, guys, because our fund accounting concept itself, majorly we're going to focus on these mutual funds, private equity, hedge funds. What kind of fees they are going to collect, how to calculate fees, how to calculate NAV, net asset value, what is the corporate action impact on the each kind of funds. All these things we will discuss. Now you understood, everyone, about these concepts?
Yes, Mahesh.
Everyone? Anyone have any
Yes,
doubts
sir.
on this? Anyone have any doubts?
No, sir. No, sir.
Then I'll talk about few financial regulators. Not required actually. Financial regulators. I'll give you a few financial regulators as well. Just for namesake, we'll discuss 2, 3. In India, we know, right, who are the financial regulators we have?
RBI.
SEBI.
RBI,
RBI,
and
SEBI.
we have a SEBI
RBI, sir.
and Insurance Regulatory Development Authority. And for pension funds also, we have one more thing. Pension Fund
Pension
Regulatory and Development Authority. We call it the PFRDA.
RD.
Yeah, this is for the pension funds. So these kind of regulators we have. And for Ireland also we have. Once you get into the job, you will see all these kind of words in your systems and all. Central Bank of Ireland, CBA, Central Bank of Ireland we have. And we have UK. In UK also we have a FCA, Financial Conduct Authority, FCA, Financial Conduct Authority. And we have a PRA also, I think, PRA, Prudential Regulation Authority. What else we have? In Luxembourg also there is a word, I'm not exactly remembering. In Luxembourg also there is Luxembourg. I think CSSF. I'm not sure about the full form. Let me see this full form. CSSF. Something commissioned surveillance or something. But the word is different because they use different language actually there, Luxembourg. Yeah, oh no. Financial Sector Supervisory Commission. Yeah, this is the one. We call it a different one, I think. C Commissions Day or something. It will come in a French language. I think. Yeah, this one. Like this. Commission Day, Surveillance, Sector, Financial, something. This is called CSSF. Once you get into the job, you will see all these kind of words. Commission, Surveillance, Sector, Financial, like that. These are all the regulators who will monitor our fund houses and everything. Okay. Now we'll talk about few important participants in the fund. Is anyone getting bored with the topics? Hello. Anyone need break?
No,
No, sir.
I need a break just for 5 minutes. I'll come back with water. Okay. I'll keep it on mute. Okay, guys. I'm actually start. Shall we start?
yes.
Yes, bro.
Okay. We will see the important persons and the participants, not participants, or we can say the persons who are involved in the fund accounting, the entire fund houses. Okay. First, we'll start with IM. We'll talk about persons. Funds. First one is IM, investment manager. From here onwards, very, very important, guys. The entire topics. So be focused. So the investment manager. You know what is the investment manager? I think the first day itself we spoke about the investment manager. Who will take? I mean, what is the responsibility of investment manager? What he will do?
He will take decisions where to
taking care
invest
of
the pooled money.
Investment decisions will be taken by the investment manager. Very high qualified who's having a professional experience in the management of funds and all will be elected, selected as the investment managers. So they will take the investment decisions, where to invest, how much we have to invest, how to, what kind of strategy we need to follow. Everywhere will be there in private equity, hedge funds, mutual funds. Every fund will have an investment manager. Obviously, as an investment manager, he will take the entire responsibilities of investment. The investment decisions will be taken care by the investment manager only. We'll all receive the instructions like what kind of trades we need to book. Everything will should come from the investment manager only. Okay. The next one, fund administrator. Fund admin. Our work majorly going to be in the fund administration only. If you get selected for the fund accounting, you will be acting as under the fund administrator. We have this JP Morgan, State Street, Morgan Stanley. These are all fund administrators. Of course, they are also custodians. In addition to that, they do have all these services called fund administrator services. What is this administrator? What exactly the administrators will do? See, as a fund, as a fund, we have different activities need to be taken care on a daily basis. Investment manager just give you the instructions where to book, how many shares we have to purchase from this company, how much investment need to be done, when we have to realize this investment, when we have to sell this investment. That kind of instructions, commands will be given from the investment manager. Who will implement all this work? As a fund administrator, implement the transactions. In addition to that, what they will do, they have to charge some expenses, right, to the fund. We spoke about management fee. What is management fee? For maintaining all these things, the fund will charge some fees from the investors, right? That fees also will be charged by the fund administrator. Basically, the calculation of fees, collecting fees, everything will be taken care by the fund administrator. And also, if new investors are coming into the fund, new investors, who is the new investors? How they will come into the fund? How they will come?
By taking subscription.
Yes, by taking subscriptions. Subscriptions will be taken care by the fund administrator. And also if there are any redemptions also will be accounted by the fund administrator. And there will be transferring of securities from one person to another person. That kind of work also will be taken care by the fund administrator. And the most important thing is the pricing. You know what is pricing? Suppose this fund purchased 100 shares in TCS company. At 120 rupees. Today price is 120 rupees. Next day itself, the TCS price definitely will fluctuate the share price, right? Today it's 120. Tomorrow it will become 120, 130, 110 also. Isn't it around? Basically, as a
Yes,
mutual
Mahesh.
fund, they're investing into the different asset classes in equities. If they have invested in TCS share will fluctuate on a daily basis, even on an hourly basis also. But as a fund administrator, what he will do on a daily basis, they have to calculate the price of his 100 shares. Today it's a 100 into 120. Tomorrow it will become 110. Now the pricing of these assets is same 100 shares into 100 rupees. This is called pricing. Basically, we are pricing the securities. The pricing also will be taken care by the fund administrator. Why we need to do on a daily basis, sir? Can't we do it monthly basis? Keep
You
this
can
point aside. We'll talk about it. Okay, when we are talking about a fund NAV calculation, I'll have to discuss a lot about it. Why there is a mandatory for the especially mutual funds. We need to value the securities on a daily basis. Why there is a daily NAV? Why we have to calculate NAV and we have to publish to the stock markets and clients on a daily basis for the mutual funds? We'll talk there. But as here we are understanding the concept called fund administrator. So the fund administrator, this pricing activity also should be taken care, and subscription redemptions and fees calculations. And one more thing is financial reporting. For financial reporting. What is financial reporting? What is reporting? Fund will also have a financial statements, right? How much profit they are getting, what is the asset category, what is our liabilities value, asset value. At least yearly once the investors should know, right? We have invested some amount into the fund. Obviously, we have a right, and we should also check the financial statements of a fund, right? What is the performance of fund? What is the asset value? What is the liabilities value? Whether the fund is performing well or not when we compare with the remaining funds. All these details we have. I mean, as an investor, they want to know, right?
Yes, sir.
So what they have to do for every fund, they have to prepare the financial statements. Monthly financial statements will be there. Reports. Financial reporting is nothing but reports only. Financial information reports need to be prepared on a monthly basis, quarterly basis, semi-annually, annually. All this information need to be submitted to the public. These kind of activities will be taken care by the fund administrator. Understood? Understood or not?
Yes, sir.
Now let's come to the fund accounting. Fund accounting. Fund accountant. I'll write it as a fund accountant. Who is this fund accountant? We spoke about pricing. We spoke about fees calculations, and we spoke about financial reporting. Reconciliations also will be done. A fund administrator, he will do the reconciliations. Basically, to perform all these activities, there is a responsible person called fund administrator, right? But again, as a fund account, as I said, fund administrator is not a person. Fund administrator is like a big company. We have like a State Sheet, Morgan Stanley, JP Morgan. These are all fund administrators. How they will do all this work? How they will do all these activities? They will appoint one accountant. They will appoint one accountant. That accountant is nothing but fund accountant. What they will do? Pricing is due, right? Okay, for pricing, we will appoint one fund accountant. He will take care of the pricing part. We will appoint one more fund accountant. He will take care of this financial reporting. I will appoint one more person who is going to take care of expenses, who will take care of cash and settlements. Other fund accountant will be there to calculate NAV, net asset value. Basically, they'll just do the accounting work related to the funds. All these works will be done by the fund accountant. Now tell me, who will appoint this fund administrator?
Fund houses.
Fund houses. Who will appoint this investment manager?
Fund house only.
Who will appoint this fund accountant?
Fund admin.
Fund administrators. You will be recruited by the fund administrators only, not investment manager, not by the fund houses. We are going
Yes,
to be
sir.
recruited. We are going to work with the fund administrator. Again, you are going confusing with. We are learning a lot of concepts are how to invest in stock market, IPO, secondary market, derivatives, fund house, everything we are learning. Are we going to do all these things? Not at all. In the pricing part, maybe you will be responsible for the pricing only. In the financial reporting, only for the preparation of financial statement, you will be responsible. If you are a NAV team, you will be part of NAV calculations only. For the reconciliation, again in the reconciliations also we have a lot of reconciliation, trade reconciliation, cash reconciliation, position reconciliation. You will be part of any one of the activity, one of the record. Now you're getting the clear picture. What's going to be your work? What's going to be your responsibilities once you get into the job?
Yes,
Do you
ma'am.
know an
Yes, sir.
understanding?
Yes.
Yeah.
Yes, sir.
That is called fund accounting work. I
Mahesh,
hope now
what-
you. Yeah.
What is meant by reconciliation, Mahesh?
Reconciliation is nothing but verification of two sets of financial information. Now let's come to the next point. Once I cover that point, then I'll talk about the reconciliation as well. Why we have to do reconciliation, sir? As a fund house, these are all persons appointed by the same person as a fund securities, right? Between whom we have to perform the reconciliations? Between whom we have to perform the reconciliation? Let's come to the next point. I'll talk about it. Transfer agent, TA. Who is this TA again? Transfer agent. We spoke about subscription redemptions. Who is going to take care? Who is going to account these activities as a fund administrator? He will be taking care of fund subscription redemptions. How many shares are subscribing? How many shares are redemption? All these activities will be handled by the fund administrator, right? But again, whenever there is a subscription redemptions in the fund, there should be transferring of shares from one person to another person, right? And
Yes.
in a mutual funds,
Yes,
daily
Mahesh.
number of people will be subscribing, number of people will be redemptions. Subscription redemption will be happening on a daily basis. When there is this kind of huge transactions for the subscription redemptions itself, there will be transactions that we have to maintain the register book of register. Who is our subscriber, existing subscribers? Who is exiting from the fund? We have to update the shareholders' records. We have to change their addresses. We have to respond back to the shareholders' queries, isn't it?
Yes, Mahesh.
Well, new investors is coming to the investors. So directly they okay, come, you have money, okay, come and invest. Like that, do you allow? What we will verify? Suppose even if you want to open a bank account, zero balance bank account, what they will verify first thing? What they will do?
KYC details.
KYC, AML. You guys heard about it? KYC, AML. KYC, AML. What is KYC? Know
Yes.
your customer.
Know your customer.
We have to know about the background of customer. We have to check their authentications. AML, anti-money laundering. How this money is coming into the fund? Is it a terrorist money? Is it illegal money? Legal money? What kind of money it is? What is the source of income? Everything we have to check. Then we have to onboard the investors to the fund. This kind of activities will be taken care by the transfer agents. Why, sir? That work also can be handled by the fund administrator itself, right? Can they handle like this? As a fund administrator, they're taking care about the fund. A lot of investors will come. Let's say 100 members will come to participate in this fund house as an investors. Will entire 100 investors will come and successfully participate? Investments will be done in the fund house. Is it possible for the entire 100 investors? 100
No.
members.
Yes.
There will be a lot of failures in the KYC. AML will get delayed. Such kind of work cannot be taken care by the fund administrator, right? Once fund come into the fund, then I'll take it. But up to come into the fund, up to onboarding of a client, you take care this fund. For that reason, we are appointing transfer agents. The transfer agents, the subscription redemptions, payments, updating shareholders record, answering to the shareholders queries, investors queries, maintenance of AML documentation, KYC documentation. This kind of work will be done by the transfer agents. So for this one also, there will be a separate company. Yeah. In reality, there won't be separate company. In the same company, we have fund administrator, right? JP Morgan, State Street Bank and all. They will have a separate division for the transfer agents also. The same fund administrator only, but they will be having separate wing and separate department for the transfer agents. So they'll take care about that work. Understanding the point? Everyone?
Yes, sir.
Yes, Mahesh.
Suppose
Yes,
from the
sir.
transfer agents, we are saying that transfer agents will maintain the records of investors, who are the number of subscribers, number of redeemed candidates, everything they are maintaining. Because the first person will be knowing from the fund is transfer agents only. How many persons are available in the fund, how many investors, how many shareholders we have in the fund. Everything will be knowing by the transfer agents. Then fund administrator will also know about it. Suppose in the fund administrator record, 100 members are showing, or 1000 members are showing, 1000 investors are showing. 1000 investors are showing. From the transfer agents, it's showing only 1200 investors. Both are from the same company, but in the transfer agency records, it's showing 1200. But from the fund administrator, they're showing only 12,000 members. There is a discrepancy. We need to find out the discrepancy. Why it's showing in transfer agency books 1000 investors, but in our fund administrator, the fund administrator record showing 1000 investors. There could be reasons like this also, right? Yes or no?
Yes, Mahesh.
Yes, Mahesh.
Forget about the reasons why it would be, but there will be chances or not.
Yes.
Yes.
Basically, we have to verify between these two. Reconciliation nothing but how many investors we have as per the fund administrator. 1000 investors. What is the number as per transfer agents? They should be the same, right? As a fund, these transfer agents also, if they're working for one fund, the number should be the same. Because we do not have 1000 shares, 1200 shares, 1500 shares. We cannot keep the number what we want. Both should be in the same page, but we are having different numbers here. So let's find out the reason for the difference between 200 transfer agents and fund administrator. Why we are having 200 investors difference? That is called reconciliation. Everyone understanding?
Yes, sir.
Yes, sir.
Yes, Mahesh.
Reconciliation. This is just
Yes, sir.
this is one of the reconciliation. We do have a lot of reconciliation. Okay, everyone understanding?
Yes.
Yeah. Then we talk about
Yes.
custodian. Who is custodian? Who is
Financial
custodian?
institutions. They say that
Safeguarding assets and liabilities of the company.
Basically, the entire assets, funds, asset, liabilities, everything will be taken care by the custodian. Even if they are receiving some income,
And,
income also will go to the custodian only. If they want to advertise about a major event, we call them as a corporate actions. Custodian will take care of that part. Simply, they will inform all the major events to the shareholders. They will perform some supervisory duties as a custodian. Why is that? Fund administrator is already there, right? Why again we need to appoint a custodian? Fund administrator is taking care of all the activities related to the securities and fund. What if suppose fund administrator is performing like a different shares and different trades are booking? Let's say like we have 1,000 shares in a TCS company, and we have 200 shares in a HDFC or somewhere like in DMart shares. Like we have different investment in different asset classes will be there. All this will be maintained by the custodian. Suppose the entire assets again will be taken care by the fund administrator. It will be a bit confusing for him because he's basically taking care of administration process. Suppose this fund is purchasing 1,000 shares in the TCS company. Investment manager will pass this instruction to the broker. Will pass the instruction to the broker. So broker will execute the trade. Broker will execute the trade to purchase 1,000 shares in the TCS company. Once shares purchased, that information will be given to the fund administrator as well as to the custodian and investment. These 4 persons should know the transactions. Whenever investment manager gives any instruction, the instruction will go to these 3 persons with the broker, fund administrator, and custodian. Sometimes it may not go to the custodian,
Okay, sir.
but at least fund administrator, broker should go. As an investment manager, whenever they're giving, even not to the custodian. Most of the cases, it won't go directly to the custodian. It will go only to the broker and fund administrator. What kind of instruction? Suppose in this case, let's assume investment manager is asking to buy 100 shares of TCS. 100 shares of TCS. So broker will also execute the trade. Who are the brokers? Just in normal life, we have a Zerodha angel broking, right? Similarly, they do also have different broker accounts. So broker will execute the trade. 100 shares buy in stock market. So once they purchase this 100 shares, this 100 shares will go to the custodian. Already we have 1,000 shares in TCS. Additionally, this 100 shares will be added. Now tell me how many shares we have in the TCS account?
1,100.
1,100 shares will be holding by the custodian. As a fund, we have 1,100 shares.
Yes, sir.
So fund accountant, what will do? We have purchased 100 shares extra in the TCS company. Okay, let's write an entry. We purchased 100 shares in TCS. So as of now, fund is having 1,100 shares in TCS. He will make an account. Because fund administrator also received this instruction, right? Purchasing of 100 shares. So fund administrator will pass on this information to the fund accountant. So fund accountant will record in the fund books as we purchase 100 shares extra. So totally we have 1,100 shares. And custodian will also receive 100 shares. Earlier we have 1,000 shares. Now 100 shares received. Totally 1,100 shares are having by ABC fund. Like that they will record. Everyone understanding
Yes, sir.
the role of each and every party in the fund? Everyone understanding or not?
Yes, Mahesh.
Understand.
Again, here also there will be some discrepancies. What kind of discrepancies? Here, investment manager giving instruction to buy 100 shares of TCS company. The moment we receive the instruction, what fund administrator will do? He will go and book this trade. 100 shares purchased at 100 shares purchased. So total we have 1,100 shares. That like that they will book the trade. Suppose broker executed this trade to purchase 100 shares. Because of availability, lack of availability, he could place the order only for 90 shares. He could purchase only for 900 shares.
Right.
Sorry, 90 shares. There is no shares as per the price given by the investment manager. Shares are not available in the stock market. So he couldn't place the remaining 10 shares. So he purchased only up to 90 shares. So now tell me custodian will receive how many shares?
90.
90 shares.
Only 90 shares will be received. But how many shares will be having custodian account after receiving 90 shares?
1,090.
1,090 shares will be having
1,090.
custodian account. But what we recorded in a fund accounting, fund team, what we recorded?
100 shares.
100 shares we recorded because investment manager given some instruction. As per the instruction, I executed the trade. That's it. Again, if I perform the reconciliation, I'll be having 1,100 shares in my account, in the fund administrator account. In the custodian side, it's showing only 1,090 shares. There is a 10 shares different. I want to reconcile. How to reconcile this trade? How to reconcile this break? Which document I can refer? Can anyone tell me? I want to resolve this. Investment manager given 100 shares. We booked 100 shares. But in custodian showing 90 shares only. Who did this mistake? Or is it correct or not? I did a mistake. How to know? Which document is the proper document to verify and validate the transaction? Where it is 100 shares or 90 shares, you want to know. Which document you can refer now?
Shares allotment document.
From whom you will get that one?
Broker, from broker.
Exactly, guys. From the broker. So let's download the broker statement. In the broker statement, we can clearly see right? Investment manager given 100 shares instruction, but they have placed only for 90 shares. Problem solved. So now what we will do? Here we booked 100 shares, but we have placed only for 90 shares.
Have to
90
modify.
shares received by the custodian. There is no disturbance. What we have to do? Let's reduce this 100 shares to 90 shares. That's it.
Modification eligible.
That's it, guys. Problem solved. So again, our accounts also will record as only 1090 shares only. Problem solved. Now we understood the major point in the reconciliation. Whenever we are doing a reconciliation, broker statements will play a major role. Broker statement is a validated document where we can check the board, where we can check about the trades. If it is only about trades, guys, again, it's not for everything. It's about trades. As a custodian, whatever the accounts, whatever the shares they'll receive, whatever the assets they'll receive, they'll maintain. There will be interaction between the fund administrator and custodian as well. Whenever you need the documents, you can ask them. But as a fund accountant, as per the investment manager instructions only, we will record it. There would be differences between the broker execution and investment manager also in some cases. It's just one type of example, not it would be the same thing in every case. One of the example. Understood now? Everyone?
Yes, Mahesh.
Similarly, custodian is holding this many shares, 1090 shares are holding. Suppose TCS announced dividend. TCS announced dividend. Let's say they have announced 100 rupees dividend. Who will receive the dividend first? Will fund administrator will come to know about the dividend? Investment manager will come to know about it. Who will receive the dividend first? Who will come to know whether the dividend received by the TCS shares or not? I mean, by the fund.
Fund accountant.
No, guys, custodian will come to know. The entire shares are holding by the custodian, right?
Yes,
It's the
Mahesh.
custodian responsibility. Custodian should collect the income. Custodian should collect the income.
Yes, Mahesh, got it.
So as a fund account administrator will come to know, we will record the entry. Okay, we have received this much interest, we have this much dividend announced, so we will record the entry. But who will receive that interest in dividend? Custodian only. We know when we are going to receive and all, as a fund administrator, we know. But exactly whether we have received it or not, who should know? Custodian should know. Because the entire assets, cash balance, sales, and everything maintained by the custodian only, right? We are not maintaining. We are just working based on the documentations, instructions. Exactly, custodian will come to know whether the dividend received or not. Again, while booking the dividend interest also, there would be certain discrepancies. To avoid these discrepancies, to resolve the discrepancies, we need to perform the reconciliations. Understood, everyone? Understood or not?
Yes, Mahesh.
Yes, sir.
Yes, sir.
Then we have one more.
Understand, sir.
Then we have one more person. Do you guys thinking like we have different companies, fund administrator from a different company, fund account from a different company, transfer agent from a different company, custodian from a different company? Are you guys thinking like that? In majority of the cases, all these three persons will be in the same company. Fund accountant, fund administrator, fund accountant. In few cases, may have a different custodians. In majority cases, custodian also will be the same. Self-custodian will be there. State Street is a custodian. Northern Trust is a custodian. BNY is a custodian. Bank of New York, that is also custodian. So most of the companies will also have a custodian department also. Self-custodian will also be there. But again, depends upon the different types of funds will be there. They will be available, right, from the different countries. So few investors may prefer, few funds may prefer having different custodians. In that case, we may have to interact with the different custodians. But transfer agents will be the same company, fund administrator, fund accountant will be from the same company in majority cases. Everyone understanding?
Yes, sir.
Anyone have any doubts as of now? Okay, let's talk about one more
No, sir.
person, depositories. This is the last topic, guys. Depository. See, in terms of custodian and depository, the work is same to safeguard the assets of client of a fund. The purpose is same. But what kind of assets? Only the financial instruments will be taken care by the depository. Only the financial instrument. If it is any kind of assets, custodian will take care. If it is only financial asset, depositors will take it. What kind of financial assets? Bonds, equities, these kind of instruments will be there, right? Shares. So those kind of instruments will be taken care by the depository. Depository is anything but we have demat account, right? Demat is like an account. That is also depository, one type of depository. In electronic format, the shares information, asset information will be handled by the depositories. And also the cash flows. Suppose if I'm purchasing on a financial asset, cash will be moving out from the fund, right? If I receive some interest will be receiving, right? They will just monitor that activity. They will just monitor the activity. In most of the cases, custodian depositories will have a same company. They just have a separate account. That's it. The purpose is same to maintain and to safeguard the financial information. But in a depository, only the financial instruments in the custody. Again, in the custody, we have different assets, right? Fixed assets, tangible, intangible assets will be there, right? Suppose let's assume custody is holding some building and shares and bonds. These are the custodian holding different kinds of assets of a fund of a client. Depository will take care of only these two instruments. Getting the point now? There will be depositories who is going to take care of financial instruments of the custodian. Everyone understanding or not?
Yes, Mahesh.
Only the financial instruments which are holding by the custodian will be taken care by the depositories. Basically, the cash deposits, guys. Deposit is nothing but the cash movement. They will monitor all the cash flows and they'll review the significant cash flows also. Suppose suddenly custodian has received 100 crores cash. That activity will be monitored by the depository because huge abnormal cash deposit. If there is an abnormal cash movement from the custodian, that activity also will be monitored by the depository. Just to monitor the cash flows in the custodian, the depository department will be there. But again, this is also part of custodian only to reduce some operational risk and to implement some internal controls. The depositories will be there in the fund accounting. That's it. We don't need to discuss much about it. And one more thing is independent auditor. One more thing, independent auditor. Why we have an independent auditor? You know what is the meaning of auditor? What is the meaning of auditor? What they
To
will do?
identify the errors.
No. They won't rectify the errors. They will find out the errors. That's it.
Identifying. Yeah,
Identification,
identifying.
not for the way rectification. Rectification work on all we don't do. As chartered accountants, we don't do any rectification work. We'll just identify the frauds and errors, mistakes. We will provide some authentication, not authentication. We will certify the financial statement, whether the financial statements are correct or not. We will give our opinion on financial statements. As an investor, if they have invested a lot of money, crores of money into the fund financial statements also need to be verified, right? As a fund house, I can prepare some fake documents. I can publish to the I can publish it to the government, right? There is a possibility from the fund accounting side, right or not? As a fund administrator, when they're taking care of the entire process of pricing, valuation, everything, they can also do some errors and mistakes, right? Intentional mistakes also can be done from the fund administrator. Some false statement also can be included in the fund accounting, right or not? How to
Yes,
trust
bro.
these fund houses, whether they're providing correct information or not, how to trust. What they will do, let's get them audited by the independent auditors. We will appoint one independent auditor. Independent auditor will come and check your financial statements. They will give a report, audit report. Based on the audit report, we can rely on the financial information, whether the fund is performing well or not, whether the financial information provided by the fund is correct or not. We can rely on that. For that reason, we will appoint one independent auditors, not directors. Independent auditors will be appointed. Who owned all these independent auditors again? Did you guys heard about these companies? EY, KPMG, PwC,
Yes.
Deloitte. Do you guys heard about it?
Yes.
BDO, GT, Grant Thornton. Do you guys heard about it? These are all big fours. Deloitte. I forgot to mention about Deloitte. These are all big four companies. EY, KPMG, PwC, Deloitte. These are big four audit firms. In the entire world, these are called big fours. And BDO, GT is like a big five and big six. these are into the audit firms. So one of these companies will be appointed as an auditor. Not only this, like this kind of companies. These are well-known companies. That's why I'm quoting this as an example. Here we have Easener Amper. Easener Amper is also into the audit department. So we have different companies who is working as an independent auditors. So one of these companies will be appointed as an independent auditor of the company, independent auditor of the fund. So they will go and they will check the entire financial statements. And they will certify the financial statements. They will provide their opinion on the financial statements. Based on that, everyone can relay and they can decide whether to invest, whether to continue. Like all these kind of decisions can be taken care by the based on the opinion given by the auditors. So basically, all these teams will be involved in the fund accounting. So can't we be part of independent auditors? You're talking about fund administrator, right? Can we have an opportunities in the independent auditor side also? We
I
can
think
have. We can.
CS only can, I think.
Yeah. Only the audit background candidates will be hired in the independent auditor firms like EY, KPMG, PwC. Everyone will have this fund accounting and fund administration related work in the every company. EY, KPMG, PwC, BDO, everywhere we have. In GT also we have. They have few projects related to the funds and fund accounting. But only the candidates from the CA, CMA, CS, and ACCA, CPA, we have a lot of professional qualifications. Only from those kind of people they will recruit. These are all the candidates we have in the fund accounting, guys. Everyone understood now? Got a clear picture about funds, fund accounting, and everything? Everyone got understanding or not?
Understanding.
Anyone
Yes,
have
yes,
any
yes.
doubts?
No, sir.
No, Mahesh.
So
After,
financial instruments,
yeah, go ahead. Lakshman.
yeah, financial instrument would be stocks, bonds, and debentures will be included or not, bro?
Yes,
Debentures. What are debentures
included.
actually? What are
All
debentures?
financial instruments, including all debentures, bonds, money market instruments, all these are part of financial instruments only.
Can you go with the debentures? What are that?
Debentures?
Yes, what was debentures, bro?
What is the meaning of debentures? You're talking, right?
Yes, yes.
Already we have discussed the same concept in the bond market. I'll discuss about it. Debentures are nothing but debt market. Suppose companies wants capital, they'll go and they'll get capital from the capital markets in the form of equity and preference shares. Similarly, if company wants in the form of loan, like if they don't want to provide their stake in the ownership form, but they need capital. So what they will do? They will go and borrow money. If they want to borrow huge money from one bank or one financial institution, it's not possible for them. So what they will do? Whatever the cash they want in the form of borrowings and lendings, they will divide the entire amount into equal parts, and those equal parts will be sold to the public. Normally in shares, how they will sell? If they want capital, they will sell it in the form of shares, right? Equity shares in the IPO and secondary market. Similarly, if they want debt capital, they will divide into different parts and they will sell it in the public. That is called debentures. Again, you will get a doubt. What is the bonds? Then bonds will also have the same feature. Bonds have a secured debenture. I mean, secured securities. Always there will be charge on the bonds on the assets of a company. But debentures, these are unsecured debt capital. There won't be any security for the investor. If you are holding any debenture in any company, you are unsecured investor. There won't be any security in the debentures. But in case of bonds, there will be security. Charge will be created in the company's assets in case of bond. That's a major difference between bonds and debentures. But features wise same. As a debenture holder, you will get a fixed rate of interest. There will be maturity. After 20 years, 10 years, your amount will get paid from the company, and debenture also you need to surrender to the company. Sometimes there will be transferring also. You can transfer it to equity. It can be transferred to preference shares. There will be that kind of feature also. You can convert. We call it as convertible debentures. Even bonds will also have the same feature. But the major difference is there is no security for the debentures. These are unsecured instruments. Just try to watch the bond market video. I think you didn't watch the video. There we discuss a lot about it.
Okay.
Then anyone else? After discussing this much topic, definitely you should get a lot of doubts. Ask me. Money? Anyone have any doubts, guys? You have to ask me. Thanks. Man. Hello.
Nothing nice. Once again we'll revise the topic, then we'll get those.
Let me stop the recording.